Wall Street has enjoyed a bull run for several years now, and many investors have done pretty well by owning stocks. But is that market changing like it always does? And can you prepare for more volatility? Joining to talk more about this, Taylor and Laurel Stewart, part of the family at Mattson Financial Services, a financial firm that's been helping people retire successfully right here in West Michigan for decades. What do you make of what we've seen? Good morning, by the way.
Yeah. Good morning.
Sorry, I always pass over that. I want to get right into it.
Right, exactly.
But 2022, I mean, what have you seen so far in the ways? I mean, people got to be a little nervous, right?
Oh, yeah, absolutely.
How do you calm people down?
Yeah, what a drastic shift from 2020 to 2021 into 2022. I mean, we just got hit with it right away, right? And so we've got, you know, inflation and then conflicts between Ukraine and Russia, rising oil prices, a lot of things that have created this volatility and a lot of uncertainty in the market. But with volatility comes a lot of opportunity as well. And so making sure that we've got this long-term plan, we can take advantage of this short-term volatility for our longevity. But that's where it comes back to looking at your portfolio, making sure that you're properly allocated as well. And if we do see the markets do what they've been doing the last couple of weeks and months is, you know, they're kind of coming up, they're coming down, and they're really, you know, now that they're down where they're at, they're not really going anywhere. So let's say that they come back up by the end of 2022 and it's just a very roller coaster ride and they come out flat. Well, how do you make any money in that sort of environment, right? So that goes back to income, making sure that you can provide a good yield into your portfolio, not just growth on these assets, but making sure that we're getting that yield off of, you know, dividend-paying stocks or other yielding type of assets and making sure that we've got that critical income need covered.
I know that Gary loves the word volatility.
Yeah.
Right? The patriarch of the company, he loves that because, you know, if the market drops like it does. I mean, your phone must ring when we have days where that market drops 1-2%, you know, down 700-800 points. So how do you? I mean, what do you tell people when they're frantically calling you saying, "Oh no, all the value of my 401k is going away"?
So it's interesting because our phone does ring, but it's a little bit for a different way.
Okay.
So a lot of our clients who've been with us through a market cycle understand, and they start to, you know, understand our philosophy and what do we do in a down market. So they'll call in and say, is this the time to buy? You know, we're ready. Or maybe they've had, you know, some assets in the bank and they know they're not getting their interest there, and so they want to look at how can we buy in and make more money. So we do look at all those different opportunities, but like Taylor said, we're talking retirement planning. So you don't want to be out there reaching for the home runs. We want the triples and doubles to make sure your plan is working for you.
And should we be checking our 401k balance? I mean, some people check it every day, it feels like. They really want to know. Should we just let that sit for a while and just kind of ignore it? Because, as you mentioned, it could all just flatten out by the end of the year.
Well, and that's where it comes back to making sure that you've got an advisor, a fiduciary financial advisor, somebody that's putting your best interest first and having that plan in place. It's still not fun to look at your statement or look online and see those red arrows and red numbers. But
especially
when we
daily.
know, right, especially daily. But when we look at this as the longevity of the plan, and you've got somebody that you can trust and you understand their philosophy.
That's important.
Yeah. So many times people meet with an advisor and, hey, I've got this guy, but I don't really know why we're reallocating things or how we do it. Understanding your advisor's philosophy and making sure that that philosophy matches up with your dreams, goals, and desires as well.
Absolutely. And I think matching up, you probably have to manage a lot of different levels of comfort when it comes to risk, right?
Absolutely.
Because risk is always involved when you're in the market. I mean, how do you help someone figure out how much risk they can handle?
Yeah, and that's where we actually have just a little tool that we start with to get to understand that. It's 11 questions and it takes just a few minutes, and it's on our website. But they can click on that, and that's where we get started to understand what's your comfort. What happens if you were to see a, you know, negative 20% return, or, you know, what are your goals and things like that. And then we're also piecing in personally, what are your retirement goals? You know, are you one that wants to travel twice a year? Are these bigger vacations? You know, do you want to live off of the principal or the interest, whatever that looks like? And it's very tailored. So there's a lot of different unique pieces, but to go back to also what Taylor was saying, we had somebody call in the other day because she said, my advisor just wants us to be, you know, wants me to go into a more aggressive portfolio, and I'm just uncomfortable with it. And so it goes back to understanding the client and also the philosophy and making sure that they match up.
And so we're going to compare that risk score that you get. You take that 11 questions, you get a number. And then we take a look at your portfolio, how it's allocated, and then create that number based on how your funds are currently allocated. And a lot of times people get uncomfortable with that volatility in the market, seeing those big swings, and it's because they're allocated totally improperly, right? They're taking on way more risk than they should, or way more risk than they're comfortable with, but maybe they don't understand that because they don't have that trusted advisor to speak with. So understanding what you have and where you should be is very important, and that helps ease that kind of peace of mind when it comes to market volatility.
I just realized that a tailored system could be something that you
very punny, right?
Right.
Because you're the tailor, right? So when it comes to people who are about to retire, should they be focused on growth? Or I mean, I'm sure the risk level is different when it comes to when you're nearing that age.
I definitely think it's a balance.
Absolutely, and in today's day and age, the markets are very interesting, right? We're in low interest rates. Now, interest rates are rising, not really fast right now, but by the end of the year, a little bit more aggressively. And so when we see volatility in the markets, typically people start to pull back a little bit, and they go into fixed income assets. Well, that's the bond asset class, and with interest rates rising, it drives those bond prices down, so it doesn't make it quite as attractive for your retirees. So now you've got to look at other areas to help provide yield to your portfolio, or still be allocated to equities and have some downside protection. Things like a buffered index strategy that we use, where you can get those market gains. It's capped, of course, but you have protection to the downside. So maybe that's 20%. You don't participate in the first 20% loss. And to be clear, what I'm talking about is a security. It's not an annuity. That's the one thing that a lot of people, kind of shy away from for all sorts of reasons. But it's understanding what your portfolio needs to do and how to allocate it properly.
So maybe somebody's close to mid-60s and they're thinking, okay, I think I'm ready to retire. How do you know? How do you tell somebody, yes, you are ready?
Well, it's funny because we sit down, we've had this conversation, and we show them, and they're, wow, okay, I can go today. I have, we have the lifestyle that we want to do, and I don't think they were quite ready for that. And so they're really excited, but they leave because they just need to think it through.
Right.
And then usually a week or two later, they're like, okay, we're ready. Let's get the paperwork. I'm going to actually, let them know that I'm going to retire now. And so it's awesome because it's just giving them the knowledge to make that credible decision for themselves and that empowerment.
Sometimes it takes a week or two for it to sink in.
Yeah,
I can do this.
Right?
Yeah.
Or actually, it was 2 days with another one.
Was it really? Only 2 days?
Yep.
Oh, wow, amazing. So if that's you, I'm sure that you guys have some way of people getting a hold of you, maybe a special promotion that you can offer our viewers.
Yes, so for the first 5 callers this morning, if you are getting ready to retire or already retired, this is an opportunity to sit down with one of our advisors, complimentary. We're going to go over your entire plan, what you've done so far, and maybe if you don't have a plan in place, now's the time to get started.
Definitely you want to do that right away.
Yes.
All right, thank you very much, Taylor, Laurel, thank you. That's an incredible offer. You want to take advantage of this. So, for you at home, take advantage of this special offer from Mattson Financial. If you are retiring, or maybe you're already retired, Taylor, Laurel, the rest of the team will sit down with you personally to customize a retirement plan just for you. A comprehensive plan that includes a look at your investments, income sources, taxes, and so much more to help get you to and through that retirement you deserve. There's the number. Call now, 616-514-3831. That's 616-514-3831.